All right, everybody, this is Taylor coming at you with the options video for April 8th. So, good stuff here for the market over the last couple of weeks. If we take a look here at a couple of charts, this is what has been treating us well. So, Google certainly treated us well. Google, you had a beautiful daily squeeze. So, in the options room, on my end, we were selling April 16th expiration put credit spreads with short strikes at 2,000. So it did take Google a little bit to get it going here, but ultimately it didn't give us much of a headache with those credit spreads. It was never really going under our short strike, and the squeeze finally fired here. So the difficulty of Google was that we had to hold the Google position while the Qs were leaving a whole lot to be desired here. When Google finally got going was once the Qs got back above the 21 and started their own 2 to 3 ATR push to the upside. So much of swing trading, the individual stocks, comes down to the timing of the overall market. So Google was really good to us. We were able to buy back those credit spreads for about 80% of max profit there yesterday, or the day prior. Same thing here with Amazon. So another one that, well, it wasn't the funnest thing in the world to sit through, that's for sure. But once the Qs got it going, Amazon got it going as well. 2+ ATR to the upside. So we got rid of our spreads for 80-ish% of max profit yesterday. And now the big question here moving forward is, does the market continue to grind higher, or do we get a pullback first? You could certainly make an argument for both of those scenarios. We have a weekly squeeze. We have a daily squeeze. When you're building up all that energy with the daily squeeze firing here, you certainly could get a bigger than 2+ ATR move. You can get, 3+. But at the same time, if we just clean up the chart and look at nothing but the Keltner channels, there is that growing probability that we hit the extension and you do begin to get a little bit of a pullback. So this goes for the SPY, this goes for the Qs hitting that extension, and it goes for a lot of the stocks that have been treating us really well here. Amazon, Google, you name it. So I think the most important thing to keep in mind is, big picture wise, this is a really bullish market. So if we pull things back up to the weekly chart, even if we do get a reversion back down to the daily 21 and a little bit of short-term weakness on a pullback, it doesn't change the fact that we're in a really bullish uptrend on the weekly chart. So with that being said, I think once the market is at this extension, you got to take into consideration the potential for the pullback to the 21. But I also don't think it means you necessarily completely avoid taking long positions. Just make some adjustments. So we're still looking for those good structures, just like Google. And one that I took here today, let's pull up the squeeze. So one that I took a little bit of here today in the options room is APPS. So we got a good looking daily squeeze, holding above the 21 EMA, stacked moving averages, a couple of red, green 10x bars. So APPS has a good structure to it. It's a good setup, but we don't necessarily have that picture perfect timing with the overall market. So Google was a bit of a bigger position for me. It's a little bit of a bigger position because you had the market in a squeeze, getting ready for its own 2 to 3+ ATR move, and you had the Qs potentially doing the same thing. With APPS here, you got the good setup on the individual stock, but you don't have that timing in the market. So you got to take into consideration, in the event the market does revert back to its 21 EMA, it's probably going to drag everything with it. As goes the market, goes the majority of stocks we focus on. So with a good looking structure like this, I think you make a couple of adjustments. I think instead of, getting aggressive for next Friday's expiration, maybe you give the swing trade a little bit more time to expiration. Don't necessarily back yourself into a corner, just in the event the market does decide to pull back next week. So I think you give your swings a little bit more time to expiration, and I also think you scale down a bit in position sizing. I save my max position size for when the market is also giving me that good structure, trading right at the 21, getting ready for its own 2 to 3 ATR move. And right now, we were able to benefit on that with the Googles, the Amazons, etc. But any entry moving forward, you don't really have that working in your favor. So I think those are a few things you take into consideration. So for APPS, we have got April 30th expiration put credit spreads with short strikes at 82. And then we bought the 80 puts as protection. So there's a good looking structure. But another one we took here today is Roku. So Roku also has a daily squeeze You got a little bit of a beat down, but you've gone through the exhaustion phase. Histogram goes from red to yellow, couple solid closes back above the 21, green 10x bars. It's got a good structure to it. So for Roku, taking a bit of a nibble here today, looking for a potential move into earnings. Also got the April 30th expiration, put credit spread short strikes at 350, and then we bought the 345s as protection. So a little bit of Roku, a little bit of APPS, and a little bit of Tesla. So objectively, Tesla is far from the picture-perfect setup, but you do got a nice couple of closes back above the 21, bullish momentum on your histogram. You're in a pretty solid daily squeeze, and under the surface, you got some really nice lower time frame squeezes setting up. So potentially the hourly squeeze here, once this decides to do something, should it fire long, it could be the trigger for that nice move off the daily chart. And like every other trade, looking for about 2 or so ATR to the upside. So I'm going to keep on looking for those good setups like the Googles, but the major thing to keep in mind is that the market is certainly extended, and while we could continue to run higher, we could just as easily pull back to the 21. So I think you give your swings a little bit more time to expiration, you consider scaling down on position size, and just remember that ideally, you're getting your most aggressive when the stock you're trading in the market are basing at the 21, and then you're taking your profits into the strength on a 2 to 3 ATR push to the upside. So there's a few things to take into consideration. I wish you the best of luck. Talk to you soon.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me